These are 8 top stocks in after hours with big percentage gains today. Our review on BULL. Webull Corporation, the digital trading platform that lets users invest in U.S. stocks, ETFs, options, even fractional shares, all from a sleek mobile app, just dropped some big news that could shift its trajectory in a major way. They're merging with SK Growth Opportunities Corporation, a SPAC, which basically means Webull's taking the fast lane to going public. The announcement came out March 31st, and the market wasted no time reacting. SK's stock spiked over 100% after hours, with a wild 70% breakout mid-session. Clearly, there's some real buzz here. So why does this matter? This deal could give Webull access to fresh capital and help them expand faster, maybe more features, more markets, or a stronger push against rivals like Robinhood. It's a big swing, and it shows Webull isn't content just being another trading app. Of course, there are still hoops to jump through, regulatory approvals, shareholder votes, all that stuff. But if this clears, Webull could be positioning itself as a serious contender in the fintech space. Definitely one to keep on your radar. Our review on KIDZ. Classover Holdings Incorporated, an edtech company focused on live online courses for K-12 students. They just completed a merger with BFAC, forming a new Nasdaq-listed holding company called Pubco. That shift officially brings Classover into the public market, and the stock, KIDZ, responded with a 34% after-hours jump, fueled by a late 35% breakout. Safe to say, the street liked the news. But that's not all. Classover also announced plans to hire 2,500 US-based teachers over the next 12 to 24 months, way up from their current base of 650. These educators won't just teach. Many will help build out Classover's AI tutor agents, set to launch in 2026. With over 300,000 hours of real classroom content already in their AI training bank, Classover's aiming to deliver a smarter, more human-like virtual learning experience. Between the public listing and the AI push, they're clearly stepping up to become more than just another online tutoring service. If they execute, this could be one of the more interesting plays in the edtech space. Our review on MB. Masterbeef Group, a full-service restaurant company known for its Taiwanese hot pot, barbecue, and bento brands like Masterbeef and Chubby Bento, just hit the public market and made a splash. They priced their IPO at $4 per share, offering 2 million shares, raising around $8 million in gross proceeds. Trading under the ticker MB, the stock saw a wild 145% breakout early in after hours before cooling off, still ending up 28%. A strong first impression, even with the fade. Alongside the main offering, about 1.8 million shares were registered for potential resale, though those won't bring in proceeds for the company. Still, the listing gives Masterbeef more visibility and cash to fuel expansion. If they can ride the momentum and keep growing their footprint, this could be an interesting small cap to watch in the restaurant space. Our review on THTX. Theratechnologies Inc, a Canadian biopharma company focused on HIV treatments and emerging therapies for things like NASH and cancer, just put itself in the M&A spotlight, and the market definitely perked up. They've entered exclusive talks with a potential buyer, turning down earlier acquisition proposals from FuturePack, which were apparently not up to par. This isn't just a casual conversation either. There's a go shop clause in play, meaning Theratech can still explore better offers even while working toward a deal. Smart move on their part. The stock responded fast. THTX popped 27% after hours, with a strong 25% breakout on the back of the news. That kind of reaction usually signals investors see value on the table and maybe even hope for a bidding war. At the end of the day, Theratechnologies has a focused portfolio, approved drugs on the market, and a pipeline that could attract the right buyer. If this deal materializes, and especially if other suitors step in, THTX could stay pretty lively in the near term. Our review on IOTR IOThree Limited, a company at the crossroads of maritime tech and satellite connectivity, just wrapped up its IPO, and while the debut was a bit of a roller coaster, it definitely put them on the radar. They priced at $4 a share, raising about $4.6 million in net proceeds, potentially up to $5.5 million if the overallotment option gets picked up. The cash is earmarked for expanding their digital platform Jarvis, getting class approvals for their tech, ramping up marketing, and general working capital. Now, here's where it got interesting. Right after the IPO announcement, shares popped with a big 120% breakout in after hours before eventually sliding right back to where they started. It was one of those quick bursts of hype that cooled just as fast, but it shows there's some curiosity in the name, even if investors are still feeling it out. For now, it's early days, but if iOThree can execute on Jarvis and start locking in big clients in the maritime space, this could be one of those under-the-radar tech names worth watching. Our review on STSS. Sharps Technology Incorporated, a medtech company focused on smart safety syringes and pharma packaging, just caught a bit of after-hours attention, and it looks like investors are starting to take notice. Their products aren't your average syringes. They've got patented designs that help prevent needle stick injuries, cut down on medication waste, and stop reuse, key concerns in healthcare delivery. They're also leaning into the growing pre-fillable syringe market with tech that plays well with pharma packaging trends. Now, what sparked the move? No fresh press release or headline at the time, but the stock popped about 20% after hours in a steady, choppy climb, nothing wild but definitely a positive signal. Could be a setup for something brewing under the surface, maybe anticipation around U.S. manufacturing expansion or just broader interest in medtech plays tied to safety and sustainability. Might be worth keeping an eye on, low float name, interesting tech, and a bit of momentum building behind it. Our review on TAOP. Taoping Inc., a China-based tech company working in cloud-based smart city platforms, digital advertising, and even crypto mining, just saw a pretty interesting after-hours move. This is one of those companies that lives at the intersection of a few buzzword-heavy industries, IoT, blockchain, cloud tech, you name it. They've got their hands in everything from digital signage to data storage to crypto mining, which gives them a lot of exposure to tech trends, but also a fair amount of volatility. Now, after hours, the stock shot up around 50% right out of the gate, then cooled off and settled with a 20% gain by the end of the session. No new headlines or filings dropped at the time, so it's possible this was a technical move, maybe traders rotating into low-float plays or speculating on an upcoming announcement. Given Taoping's blend of sectors, it tends to attract momentum traders anytime AI, blockchain, or smart city news heats up. But as always, without fresh fundamentals behind the move, it's worth watching to see if this holds into regular hours or fizzles out. Could be the start of something, or just another spark in a choppy name. Our review on WXM. WF International Ltd., the company providing HVAC, floor heating, and water purification systems for big commercial projects, just saw some action after hours that definitely caught attention. After hours, the stock had a solid 16% pop, but the real story was the 40% breakout that happened around the middle of the after-hours session. Of course, after that sharp rise, the stock didn't hold those gains and faded a bit toward the end. This kind of price movement is often tied to speculative trading or some news that hasn't hit the headlines yet, maybe something brewing in construction or HVAC markets. The company doesn't usually see huge spikes like this, so it's definitely worth keeping an eye on if any news or rumors start circulating. If you're considering jumping in, it's smart to wait for more clarity. This could either be the start of something or just a quick blip in a volatile stock. Please subscribe, give the video a like, and watch more from our playlist. Thanks.